Hey y'all, the first step in determining whether or not buying or renting is best for you is to understand the programs that are available for home purchases and what the requirements are for each of those programs. With this knowledge and assistance from a mortgage professional like me, you can make an informed decision that will best benefit you and your family. I'm George Gagnon with Fairway Independent Mortgage Company, and I make loans work for your dreams. Now, there are lots of different mortgage programs out there, but really there's 4 primary programs that I want to talk to you about. The first is a conventional loan, and this requires a minimum of a 620 credit score and the ability to pay at least 5% down on a down payment. Now, there's an exception to that. If you're a first-time home buyer, you can go as low as 3% down payment. One thing to keep in mind is that if you put down less than 20%, you will be required to pay mortgage insurance premium for a certain period of time. The next type of loan I want to talk about is an FHA loan. FHA requires a minimum of 580 credit score, and you have to have the ability to pay at least 3.5% down on a down payment. There's also a financing fee, which you can roll into the loan, and you have to pay a mortgage insurance premium for the life of the loan. And this is something big that differs from a conventional loan. If you're considering purchasing a home in a rural area, depending on certain factors like the home's location or your income, you might actually be eligible for a USDA loan. And a USDA loan, you have to have a 620 minimum credit score, but you can have 0% down payment. And even though it includes a guaranteed fee that you have to pay, you can actually roll that into the loan as well. Finally, if you are a U.S. military veteran or active duty service member, you're likely eligible for a VA loan. These require a minimum of a 580 credit score. They offer 0% down payment, and there's a funding fee that can also be rolled into the loan amount. And the best part is, it doesn't include any mortgage insurance premium. Now, if you're a disabled veteran, you might actually be eligible to waive the funding fee entirely. There's a couple things I want to keep in mind as we go along. The first is, as Jerry mentioned in a previous video, your debt to income ratio is a really important factor in determining your loan eligibility and how much you can qualify for. Now, this, along with your credit score, are 2 really important factors in determining what interest rate you're going to qualify for as well. So those are 2 things: your rate and how much you can qualify for. Second, when we talk about your credit score, when you see your score on sites like Credit Karma, it's going to be slightly different than your mortgage credit score. Your mortgage credit score has more stringent guidelines, and therefore you may see it be a little bit lower than your normal credit score, and I just don't want you to be surprised when that happens. Thirdly, as your mortgage consultant, it's my job to ensure that if you don't qualify right away, we're going to work together. I'm going to give you a roadmap to success that's easy to follow, and it gets you where you need to be, where you want to be, in as short a time as possible. Now, I want you to feel comfortable calling me anytime. Evening and weekend appointments are always available. A quick phone call, a text, or even an application online can get the process started. You can call me at 469-271-0451. Then Jerry and I can help you successfully transition from paying the landlord's mortgage and taxes and insurance and letting him keep all the appreciation and security and wealth to you enjoying those benefits of home ownership. Be sure to like, subscribe, and hit the bell for our more in-depth micro videos about each of the loan programs. I can't wait to hear from you. I hope you have a fantastic day. Thank you for your time.